And continuing our discussion on higher time frame mastery, first red day, first green day, with the approach of targeting days where they're potentially not coming back. They're coiling, they're going to explode, and they're not coming back because we have traders either trapped on the wrong side of the market or they're expanding the range. High of month, high of week, low of month, low of week, potentially reversing all the way back to the other side of the range. But the object is to target days where it's simple, repeatable, and scalable, driven by all time frames, and regardless of the instrument, easy, repeatable, scalable trading setups. Some important, simple things to remember: new week, new month, new timing cycle, weekly levels and monthly levels. Now, this simple basic model is looking for a Wednesday closing at the extreme. Now, as we've seen, we can see markets expand the range on day 2 on the front side on Tuesday, Monday, Tuesday, from the extremes. Same philosophy, same approach, markets closing in breakouts. And we'll just review some of the major pairs, index and metals for the past month, and just keeping with the simple theme of breaking those levels, week 1, week 2, week 3, and week 4. We've looked at some of the major pairs, but just sticking with some simple concepts. 3 higher closes at the extreme, a first red day signal at the high of the year, at the high of the month, high of the week on a non-farm payrolls Friday. We have a CPI high impact major red news catalyst and a second day trade. We can have a second day follow through for a session opportunity in Asia, London, or New York. Now, this is the Japanese yen. We have a perfect coil heading into our Asian session. We're coming off of a first red day at the extreme, and we have the coil sideways into our open of the Asian session. We have our coil sideways. We have our extreme just above closing price into the open of our 12 candle window, and we can project a 100% expansion of closing price to low of month, low of week, as a potential profit target for locking in the money, a session trade in line with our higher time frame. So again, going back to the understanding of open high, now we're going lower, continuing to go lower throughout the month after a high impact major red news event, a second day trade opportunity in our Asian window. And the purpose of understanding this is recognizing when you have a nail and bail coil opportunity in line with the higher time frame versus an ACB template. So people taking the trade, putting a stop in and walking away, but we're not in a ACB template. We're in a nail and bail explosive coil, still expanding the range. This market, as we can see, coiling sideways first session of the day on a Thursday, but not an ACB template, a nail and bail opportunity in the Asian window. Now, going back to our higher time frame, just recognizing a market that continues to break down, making lower lows and lower highs. And so when traders are trying to cherry pick a bottom on these markets, but it continues to break down, it doesn't mean we're going to get an ACB template, but we can monitor those for markets closing in breakout at the extremes in a new week, a new timing cycle, and then whether or not those markets actually set up for an ACB opportunity, continuing to break down one-day counter trends, continuing to break down one-day counter trend. Now we're closing out the month. We will watch how price behaves, but recognizing when markets break down, we broke monthly levels, coiling sideways, a first red day after non-farm payrolls, a CPI collapse, a second day follow through, breaking down now a market that continues to break down with a session coil, one-day counter trend breaking down again. Doesn't mean any of these are going to offer us opportunities, but monitoring the higher time frame. We close in breakout on a Wednesday. We have an example on the Wednesday closing in breakout and the high close of the week. How does price set up on the day? Now, we've talked about looking for that sideways coil, and this market distended out. We start to make auction high and low, expanding the range. We don't really get that tight sideways coil. Now, recognizing the difference between this and a really well-engineered template. Now, we'll look at this particular day. We had 8:30 unemployment claims. At 11 a.m., President Trump was speaking. We also had the BOJ report on the schedule on this particular day. Now, obviously, that may have had an impact on how this market traded on that day. But you'll also notice, just in terms of the ACB understanding, though, that market traded from closing price to the close of the day. Not an ideal template to be trading. My sons would not be touching this because we're looking for the sideways coil. Now, obviously, on this day, those events possibly impacted how this market would trade. But on a normal day, no major red news, we're looking for that sideways coil. I would be avoiding this day, but if traders did trade it still with the underlying bias, that market still played out, but just not an ideal template for an explosive, scalable coil. Remember, we're looking for the easy money. We don't want markets auctioning back and forth, but the process, Wednesday close in breakout, the high closing price of the week, in a market from our higher time frame template that was continuing to demonstrate weakness and breaking down, lower lows, lower highs, one-day counter trends, closing in breakout, and continuing to break lower. Even though this market on the higher time frame shows us that weakness, we didn't really get the perfect coil on that day. That's what happens. It is what it is. But I'm looking for well-engineered charts that are going to explode where we can scale into and not come back. Just going back and looking at our original trade, we have our pump to closing price and a vertical explosive move. These are the types of trades that I want to participate in. We can take a position in the market if traders are going to get aggressive and scale into this, into the coil, having our break even level, or even moving some of those positions to break even at the close outside of our pump area on a market that had a news momentum catalyst. It's a session opportunity. It's not an ACB, but a coil for an explosive 100 pip move right at the open of our Asian window. Again, some traders asked about Asia-London opportunities. They're going to show up in every session. But when we get explosive moves like this in sessions, often they may be the nail and bail setups. They're not ACB templates. Understanding the higher time frame, we are going to see opportunities come on Monday, Tuesday, Wednesdays, Thursdays, and Fridays. But new week, new timing cycle. We have our new month, a first green day closing in breakout, a 2-day counter trend back into our low of month level, our lowest closing price of the month, the new month, heading into a Monday, a new week, a new timing cycle. And we can see a market heading into the last hour of the Asian session on a Monday, exploding for a vertical move that continues into the close of the day. And then understanding the importance of timing. So traders will often say that's the gap time. But when we have a well-engineered opportunity for session traders in Asia or London, recognizing the rotation of time, our first 4-hour cycle has now potentially put in the extreme for the week based off of our higher time frame understanding of the first green day signal, coiling sideways into our new 4-hour rotation and an opportunity to scale into what may now potentially be an ACB for Asia, London, and New York starting off the new week. And that's the sort of opportunities that can present. So when you're aware of the behavior of price, the timing, and the higher time frame, remember we're at the extremes looking for first green day, first red day, understanding of locking in one of those extremes with the potential of a market now going till close. New month, new timing cycle, not only close of the day, potentially the close of the week, and maybe the close of the month for leaving trailers in. Just going back to the types of candles that will print on a monthly bar. So just reviewing, go back, look at your monthly charts. I like to use bar charts for the monthly, but just understanding when we get to a new month, new timing cycle, we're looking for first green days down low, open, low, first green day, and potential explosive reversal, and then carrying that thesis forward if a market continues to make higher highs. Coiling explosive moves can continue if we get that coil. Same applies for a first red day, as we just saw in the Japanese yen. We can carry through, and we may have session opportunities, but when we get an ACB near the beginning of a month, sometimes major red news may interfere with that. But we want to carry that bias through. If we're trading broken markets looking for first red day follow-throughs, we can get Wednesday's closing in breakout in a broken down market for continuation ACBs. As we just saw on the Japanese yen, an explosive move coming out of a first green day at the low of month that now potentially can carry through, and we can carry that thesis forward and looking for opportunities in our session if that market continues with that first green day understanding. When we look at the yen exploding, continuing higher, we have a one-day counter trend. But we have on the way in this explosive move, week 1, week 2, we have an inside day, a breakout, and a narrow range day. And following that through on our smaller time frame, an explosive move in the London session. Again, a coil. The reason I'm showing this is for traders to carry through and that understanding of the higher time frame driving these opportunities. An example of a London session trade on an inside day, an explosive move that traded to the close. So going back to just recognizing a market now that is potentially going to continue to trend. One-day counter trend, explosive follow through. One-day counter trend into our last week of the month, 1, 2, 3 higher closes, closing out the month. But we can have these coils present where there can be easy money continuing in line with that higher time frame thesis. The closer we get to that last week of the month, understanding that we've broken other levels, these markets now may potentially get choppier or more volatile, and we start the new cycle again. Remember, my goal is easy money, so I'm not trying to make anything complicated or fancy. If we have a market that has given us an explosive move, whether that's in the long direction or in the short direction, again, starting a month off maybe on major red news, but we're targeting easy money setups where we have all time frames driving those moves. We want to have markets potentially that are setting up for ACB opportunities, and when we can't get those, still recognizing when we have a coil in a session for a nail and bail opportunity with zero heat, zero stress, zero thinking, and zero emotion aligned with that higher time frame. It doesn't matter what market we're in. It's about the process and then identifying instruments that, as I've talked about, are either inside when they open the new month, and if they're inside, are they establishing an extreme? If we're closing up and the market has auctioned down, we've had a big move down into the closing range of the month and it coils sideways, we may now have the lowest closing price of the month in place. Timings, levels, new timing cycle. What days of the week are we in now? Monday, Wednesday, Friday, templates. On the front side of a week, day 2 can typically expand the range. But if it's the front side in a new month and they're still establishing an extreme, we may not have any templates setting up on a non-farm payrolls week or whatever. But we've had a large move into the close of the month, a first red day at the high of month extreme, setting up for a Thursday collapse, Friday first day of the new trading month, and a Monday down inside of our lowest closing price of December heading into the close of the month, a narrow range day, an inside day, a signal day. How does price set up and behave on day 2 on the front side of a new month in a new week? Just following the process, we have a nice narrow range sideways coil. Now, well-engineered charts, recognizing and building your muscle memory on well-engineered charts. A market that has now potentially put in our low of day level, coiling sideways into the open of our New York session, 9:30 a.m. New York session. Now, this particular day was the presidential election day, and we also had 10 a.m. ISM services. But forgetting all that, we have a perfectly well-engineered template heading into the 9:30 open. This is what a chart should look like. When we have our EMA coil on there, sideways coil, we already have our higher time frame thesis going back to our daily chart. Remember, we have our large dumping day, first day of our new month, an inside day, another inside day. So we have a double inside day now. And then our coil sideways. Now we had presidential elections, but forgetting everything, we want to know what is a perfectly engineered chart for an explosive move and an ACB template. We have our entry area in the coil. Now, 9:30, so when this market's already coiling, I'm in the market. I'll take a position. Now on our smaller time frame, we can even go down to the 1 minute when we have our thesis in place. This is an explosive market, and we have a double inside day. which, going back to the playbook, is a potential indication of a market preparing for a very explosive move. The most important part about this, though, is just recognizing when we have our sideways coil. We can manage our risk. We have an area to go to break even once we close outside of that range. We had Tuesday, our low close of the month, in place, and then we have behavior of price into our no-brainer thinking. There's no thinking involved. Position, stop loss, break even point, and walk away. When we have a sideways coil like this, we're on the front side of a new week, new month, new timing cycle. We now may be going on a major run. And this is an example, especially with an index, which typically over time will continue to go higher. This market carried through day 1, day 2, day 3 trending. Day 1, day 2, day 3 trending. So traders can take a position, the bulk off at close, or leave their positions in the market if they're confident that this market now can continue to expand the range. But recognizing new week, new timing cycle, new month, low close of the month, coiling sideways, double inside day, all our EMAs lined up for an explosive range expansion. Now people can say it was, blamed on the election and whatever else. Don't worry, I don't worry about any of that. Do I have a perfectly well-engineered template on the day in the session that I'm trading? Remember, the goal is easy money. And when we get our coils sideways like this, there's no science projects, there's no analysis paralysis. This market is preparing for an explosive move. And whether this is a Thursday, a Wednesday, a Tuesday, or Monday, when we have these markets set up like this, again, no-brainer thinking. Entry, stop loss, break-even level, and either a measured move, range expansion target. Typically, minimum is going to be 100% level of the high-low of range. If it doesn't hit that, a hold till close. But when we can gauge this going back to our higher time frame, that we may now be in a move that is targeting back towards the high of month level, have the understanding to be patient and potentially hold on to partials that can continue to provide profits in a winning trade setup. New month, new timing cycle, first green day, double inside day, coil sideways, and an explosive move. We get these opportunities all over the place, being patient, being willing to hunt out simple setups, understanding the higher time frame, recognizing where we have opportunities for markets to trade from one extreme now, or carrying that bias if we're in a month that may potentially be trending. Keep it simple, traders. We'll see you in the next video.